Now we're going to get practice figuring out what transactions go in which journals, special journals or the general journal. So we're going to have some transactions and then we have to figure out which journal they go into. So here's our abbreviations. S means the sales journal, and of course the sales journal only has sales on account. CR is cash receipts journal. We use that journal whenever we receive cash. P is a purchases journal. We use that when we purchase something on account. CP is a cash payments journal. We use that whenever we're paying cash, so that is like a check register. And then if a transaction does not go in any of those, we're just going to put them in J, which is a general journal. So here's our first transaction. You make a cash purchase of inventory. Now some students immediately say, oh, it must be the purchase journal. But remember, the purchase inventory is only purchases on account. Since we make a cash purchase, that means we're spending cash. So that's CP, cash payments journal. Next, you make a collection of dividend revenue earned on an investment. Which journal is this going to go into? Well, we are receiving cash, so that's CR, cash receipts. Next one, you make a prepayment of insurance. The key word is payment. We're paying cash, so which journal is that? That's cash payments, CP. Next, you borrow money on a long-term note payable. So what's happening to cash? If you're borrowing money, cash is going up. So we are receiving cash. That is the CR, cash receipts journal. Next, you purchase equipment on account. Since you're buying something on account, that's the purchases journal. Next, we've got cost of goods sold along with a sale on account. So that's a weird way for the publisher to say it's a sale on account. So if we sell something on account, that's S, sales journal. Next, you make a cash sale of inventory. We're receiving cash, right? So that means we need to use the cash receipts journal. It's not the sales journal because the sales journal is only for sales on account. Slide 2. Same abbreviations, same journals. You pay rent. Since we're paying cash, CP, cash payments journal. Next, depreciation of computer equipment. Well, that's not going to go into any of the special journals. That's going to go into the general journal because that's a transaction that doesn't happen very often and it's not a repetitive transaction. And remember, the special journals are set up for repetitive transactions. Next, you purchase inventory on account. Well, since the purchase is on account, that's a purchases journal. You collect on AR. Well, we are receiving cash, so that's cash receipts. Some of your prepaid insurance expires. So what do you do when your prepaid insurance expires? You've already paid for it, so cash is not involved. So you just do an adjusting entry at the end of the accounting period. So where do adjusting entries go? They go in the general journal. You make a sale on account. This one should be easy by now. That's the sales journal. And finally, you pay on account. So you pay a vendor who you owe money to. So since we are paying cash, that's the cash payments journal.